All right, so we hit the milestone right here in Worldwide Exchange. Reports say we're up to 1 trillion. I know your numbers are showing similar data. What does that really mean when we're talking about investors? The fact that we hit this new milestone this year, far surpassing the previous record.
You're right. So we passed the record a few weeks ago. I was on CNBC talking about it with you, but we've seen continued acceleration throughout November and heading into December. That's a tremendous sign, a great accomplishment for the ETF industry and for investors. We're really excited to see adoption. We've seen retail investors move into the ETF space. Advisors further embrace ETFs, institutions latch onto it. And you mentioned SPY, that's the largest ETF that has seen inflows this year. Some of its peers that track the same S&P 500 that we're showing on the screen, IVV has passed over $50 billion. VOO, which is Vanguard 500 ETF, has $100 billion of net inflows alone. It's been a great year for the ETF industry.
All right. We've also seen more diversification when it comes to ETFs. I was just mentioning one of them, the SPMO. It's a factor ETF. Is that generally people trying to beat the market? And what direction do you see that going in? Are we going to see more of these specialized ETFs as opposed to index funds like the SPY, which just tracks the S&P 500 or the triple Qs?
So I tend to think of the equity ETF space in a few different buckets. So we've got those market cap weighted ETFs like SPY. We have those factor ETFs. You mentioned the momentum ETF that has performed well. There's also some quality ETFs. QUAL from iShares has been very popular this year. VFlow from Victory Shares has crossed $1 billion. It's a relatively new ETF. Those are trying to outperform, but on an index-based approach. And then we have actively managed equity ETFs that have been gaining traction. T. Rowe Price is one of those firms that's leading the charge with product development. They have an ETF, TCAF, that's gathered over $2 billion in just the last 12 months. BlackRock's had success with active ETFs. Capital Group has had success with active ETFs. We're seeing more active ETFs. We think that's going to be popular in 2025 as well.
Something else we've talked about here on the show are actually bond ETFs. I know one that you're tracking is the AGG. It's the iShares Core U.S. Aggregate Bond ETF. With a rate cutting cycle more than likely happening next year, do you continue to see inflows into those bond ETFs?
We do. We had a record year for inflows for fixed income ETFs. We actually hit that in September. This has been a record year across many levels for the ETF industry. AGG and its peer BND from Vanguard offer core bond exposure. But we have seen investors take on a little bit more interest rate risk. They can do so with Treasury ETFs like TLT. They can take on interest rate risk with an actively managed ETF. Fidelity has FBND that's been very popular. And we've also started to see investors move out of money markets and move into cash-like, but a little bit higher yielding ETFs. PIMCO has an ETF, MINT. This just crossed its 15-year anniversary and has seen over $1 billion of net inflows this year. We really think fixed income ETFs are going to remain relevant for investors in 2025.
So, Todd, we're almost out of time. I want to ask you one more very quick question. We're also seeing private credit and private equity ETFs. Kind of explain that. When we're talking about those kind of ETFs, what are those ETFs investing in? How exactly does that work?
So BondBlocks launched one of the first ETFs earlier this week, and it's investing in CLOs focused on the private credit market. It's adding some liquidity to a less liquid market. BondBlocks is one of those innovators within the ETF space and within the fixed income space. We're really excited to see how this area develops, but BondBlocks is one of those leaders.